Hello C aspirants, welcome back to part 2 of costing. I'm really sorry for the delay. As you can see, there is a change in my voice. I was really not feeling well. I know this point is very crucial. That is why I'm uploading the part 2. I'm actually recording it at let me show you the time. It's actually 1:37. Okay, we'll do it. The notes will be uploaded in the Telegram channel. The link is in the description. Please go and check it. We'll be uploading it in minutes after uploading this video. We have stopped here, that is joint product. Two or more products of almost equal importance produced in natural proportion simultaneously from the same material in same process may be sold with or without further processing. That means it can be sold in the middle also, like if it has 3 processes to be completed, it can be sold in process 2 also. It can be sold after completing 3 process also. What is split off point or separation point refers to the stage in the manufacturing process at which the products get separated and become separately identifiable. The next chapter is Before going to the next chapter, we'll also learn about allocation of joint cost. That is physical unit method. Joint cost is apportioned amongst joint product in the ratio of physical units. Survey or point value method here in ratio of weight. Weight is equal to units produced into points allocated. Contribution margin method. Joint cost is apportioned amongst joint product as follows: in case of variable proportion in the ratio of units, in case of fixed proportion in the ratio of contribution, sales minus variable cost. If it is contribution margin method, this point is not so important, survey or point value method, but mostly the contribution margin method is asked, whereas we have to remember this point mainly, that is fixed proportion, sales minus variable cost, that is contribution in the ratio of contribution. Market value at separation point method in the ratio of sales value after further processing. Sales value after further processing is equal to units of joint product after further processing into selling price after further processing. Net realizable value method says cost is apportioned amongst joint products in the ratio of NRV. Computation of NRV, sales value after further processing minus further processing cost, or make reverse cost sheet to find out profit. We can make in the normal cost sheet order also, but in case if we do a reverse calculation, we'll be getting the answer so easily. In case if we do the normal cost sheet, we have to find the missing figures in between, but if it is reverse cost sheet, we'll be getting the answer properly. You'll be getting marks for both the things. Reverse cost sheet, how do we do that? That is like sales value after further processing minus estimated profit. Wherever we add, we have to do it minus. Wherever we do plus, we have to subtract. Cost of sales, when we subtract sales and distribution expenses, we'll get COP minus admin expenses, that is general, we'll be getting factory cost minus further processing cost, we'll be getting balance or share in joint cost. Share in joint cost of the product of which profit percentage was not given. This means profit. This symbol represents profit. Total joint cost minus share in joint of all the products for which cost sheet was prepared. Computation of profits. Computation of profit if sold at split off point. Sales value at separation point minus share in joint cost. Computation of profit if sold after further processing. Sales value after further processing minus share in joint cost minus further processing cost. In case of decision making, decision about further processing of joint products, incremental sales value after further processing minus sales value at split off point minus incremental cost, that is further processing cost, incremental profit if positive, process further if negative, will be a selling off at that point itself. Let's revise the chapter standard costing. Criteria against which actual activity can be compared to determine the difference between the two. Determine what should have been under the given set of operating conditions. For variance, variance represent the deviation of actual performance from the standard performance. It can be favorable or not. Material variance, actual cost of material consumed into actual rate. We'll be doing this. This is not so important. We are just revising the formula, so I think these things are not so important. When it comes to material variance, that is MCV is equal to standard price into standard quantity minus actual price into actual quantity. As we are at the end of the exam day, that is we are revising at the exam day, I'll be using the short form itself. Please cooperate. In case of any doubts, please comment down in the comment section, or else you can directly DM me on Instagram or Telegram. MPV is equal to SP minus AP into AQ. MUV is equal to SQ minus AQ into SP. For this, I'll be remember this as U is equal to SAS, that is S, A and S. This looks like Q, that is why we'll be writing Q here, and the leftover is P. For P, it is like SA, SAA, and the P is here, so it will be right PP, and outside it will be Q. When going into the logic, we don't have enough time to know about the logic now. That is why this is my short form. In case if you are struggling with this formula, you can just remember with my shortcut. For labor variance, it is like LCV is equal to SH into SR minus AH into AR. This is actual and this is standard. LRV is equal to, this is rate, this is efficiency, SR minus ER into AH. We remember, right? In case of P, that is SA, and U, that is SAS, like that. Here the names change, but here we'll be writing usage, here it is efficiency, so we'll be knowing about it, that is SA and SAS. Here comes SH minus AH into SR. Coming to our revision papers, now let's see about reconciliation, done only in case of non-integral system. In case of integral system, will not be doing this. Profit or loss as per cost accounting. The most chance is cost accounting. In case of financial accounting, it will be changing. We'll learn like this. Plus incomes as per financial accounting only, plus profit as per financial accounting only, minus expenses as per financial accounting only. We'll also subtract losses as per financial account, minus appropriateness as per financial account, plus over recovery of expenses in cost accounting. If we have subtracted so much, we have to add it back, minus under recovery of expenses in cost. This is actual common sense. If we use our common sense, this will be very easy. See, just like over recovery, that means we have subtracted more, we have to add it back. If it is under recovery, that means we didn't reduce that so much, we have to reduce it. Plus excess valuation of opening stock in cost accounting. If this is debit and this is credit, here we'll be writing opening stock, right? Here it will be closing. If this is high and this is debit side, to set this off, we have to reduce it. If the debit side is very high, we have to credit it. In case of a debit, it is minus. In case of credit, that is plus. Here we are giving the opposite effect, that is plus, so we have to add it. Minus excess valuation of closing stock. See, in case of closing, if this is high, you have to give the reverse effect. If this is high, we have to subtract from here, that is in debit side. If it is minus, so we are writing, we are subtracting it. Minus undervaluation of opening stock in cost accounting, and the reverse effect takes place in case of excess valuation. We saw there, in case of the undervaluation of opening stock will be subtracting it, undervaluation of closing stock will be adding it, plus notional expenses taken in cost account. Later we'll be getting profit or loss as per financial accounting. Memorandum reconciliation account is prepared like this: to loss as per cost accounting minus to profit as per financial accounting by profit as per cost accounting by loss as per financial accounting. We should remember this. This is loss as per cost, and profit as per financial. This is profit as per cost, and this is loss as per financial accounting. This is minus sign and this is plus sign. Coming to the next part, that is integral and non-integral. We have seen this is prepared only in case of non-integral. Now let's know more about it. For materials, in case of purchase, we'll be writing SLC to GLA, normal, production overheads control to SLC account, abnormal, costing P&L account to SLC account, absorption of direct material, WIP control account to SLC account, absorption of individual matter, production overhead, admin overhead, or anything that is related to SLC account, return from job production, SLC to WIP, material transfer between jobs, there will be no entry in this case. In case of wages, wages control account to GCA account, absorption of direct wages, WIP to wages control account, absorption of indirect wages, that is production overhead cost, or whichever it is related to wages control account. In case of direct expenses, it is direct expense control account to GLA account. In case of absorption, it is WIP control account to direct expense control account. For production overheads expenses, production overhead control account to GCA account. For absorption, WIP control account to production overhead control account. Transfer of cost to finished goods control account to WIP control account. If you feel this revision is so fast, you'll be getting the notes in our Telegram channel, which is in the link is in the description. Join there and you can view this PDF, so that you can read that once, which will be revising a few hours before the exam. For administrative overheads expenses, admin overhead control account to GLA account, absorption of FG control account to admin overhead control account, transfer of COGS cost of sales account to FG control account, selling and distribution overheads expenses, selling and distribution overheads control account to GLA, absorption cost of sales account to selling and distribution account control account, selling and distribution control overheads control account, transfer of COS costing P&L to cost of sales account, sales GLA account to costing P&L account, profit costing P&L to GLA, in case of loss GLA to costing P&L. Under or over recovery, in case of under recovery, it's costing P&L account to whichever the part is, and overheads control account. In case of admin, it will be admin. In case of selling and distribution, it will be selling and distribution. Over recovery, selling and distribution or admin overheads control account to costing P&L account. Account having carried down, that is store ledger account. This will be having, you read it once, I'm I'm really going to skip this chapter as I didn't understand anything about it so much. I only read about the basic entries. So in case of this chapter, I'll not be writing the answers. So please read this once. Accounts will those will not be having carried down values. Coming to next chapter, that is our favorite chapter, that is service costing. Service costing, here in case of reading, while we are reading the question, we have to mark, or you have to simply roughly you have to write it, then it will be very easy to solve. This is my very favorite chapter. In fact, number of passengers into number of kilometers, seating capacity into occupancy percentage into kilometers or trips, into number of trips per day, into number of days, into number of buses. This is the format. While reading the question, this will be so easy. No need to mug up the this formula. While reading it, you can just write it using our common sense. Tons kilometers, outward journey 5 into percentage, number of turns into number of kilometers, that is we have to take this. Inward journey, we have to take the same thing, like number of turns into number of kilometers, that in case of outward and inward, how many percentage it has been included and how much kilometer it was, then we have to add it and we'll be getting ton kilometers. While calculating absolute ton kilometers, number of ton carries into number of kilometers. For commercial tunnel kilometers, average tons carries into total kilometers. We know about average, right? Opening plus closing divided by 2. Cost units, hotel sector, number of room days, hospital sector, number of patient days. These are common things that we can remember it so easily. That is why I'm not going into deep. Coming to the next chapter, that is marginal costing. Here the format is sales minus variable cost is equal to contribution minus fixed cost is profit. This is very important in FM, which we'll be revising on the day of FM. If this is very basic, we'll be remembering it. So going to the next part, if this is very clear to us, then the formula will be so easy. In case of contribution, it is like sales minus variable cost, that we know already about contribution, or else fixed cost plus profit will also give us contribution. Variable cost, sales minus contribution. Sales minus contribution will give us variable cost. PV ratio, or contribution to sales, or contribution ratio, or variable profit ratio. These are the names for PV ratio, that is contribution by sales, or change in contribution by change in sales. See, contribution by sales, the names are PV ratio, contribution to sales, contribution ratio, or variable ratio, variable profit ratio. Coming to the next thing, that is, I hope you understood this. PV ratio is equal to contribution by sales, or change in contribution by change in sales into 100. We'll be getting the same answer. Break even point, as we know, sales is equal to variable cost plus fixed cost, then contribution is equal to fixed cost. We have to cover the amount in case of break even point, that is contribution. If it is equal to fixed cost, we'll be getting the profit as 0. We'll be getting no profits. We can also say it as fixed cost divided by contribution, or fixed cost divided by PV ratio. What is PV ratio? Contribution by sales, or change in contribution divided by change in sales. For this, break even point percentage divided by total sales also we can do, we'll be getting the answer. In case of not sufficient information, margin of safety, level of sales beyond BEP, that means sales minus BEP. What is BEP? FC divided by contribution, or FC divided by PV ratio. Here it is profit divided by contribution, or profit divided by PV ratio, or margin of safety divided by total sales. Margin of safety into sales price, sales minus BEP. Okay, we saw this here. The other formulas are profit divided by contribution. We'll be getting the margin of safety. Profit divided by PV ratio also will be getting the same. Coming to sales, to earn desired profit, we have to take fixed cost plus desired profit minus expenses or losses divided by contribution per unit, or fixed cost plus desired profit minus expenses or losses divided by a PV ratio. To make before tax, we have to divide it by 1 minus t. To make it after tax, we have to multiply by 1 minus t. For shutdown point, the minimum sales to be achieved to continue the business. Avoidable fixed cost divided by contribution unit, or PV ratio. If the actual sales is greater than shutdown point, we have to continue. If actual sales is less than a shutdown point, we have to shut down it, so that we'll be incurring no loss. At least the loss will be reduced. Combined BEP used when organization is selling greater than one product, that is combined BEP is equal to total fixed cost divided by weighted contribution. Coming to the next chapter, that is material costing. EOQ is equal to root of 2AO divided by C. It is annual demand of raw material. See, raw material, they'll give you something else to confuse. We have to remember it. Even if it is a small point, there is high chances of getting tough questions this time, that they may confuse us, or they may give us a lengthy paper. That is why we'll remember each and every single point. O stands for ordering cost and C stands for carrying cost. EOQ is equal to EOQ rupees is equal to EOQ units into cost per unit of raw material. Annual demand of raw material, ordering cost per unit, ordering cost per order, carrying cost per unit per annum. If it is in percentage, cost per unit into carrying cost percentage. Number of orders, annual demand divided by EOQ. Order frequency schedule, time between two orders, we have to take 360 days in case if it is mentioned in question, or 365 days with assumption, and also 52 or 12. It is weeks and this is months, divided by number of orders. How do we define number of orders? Annual demand divided by EOQ, or the ordering quantity that we make to the supplier. Next, components of cost, or particulars relevant or related system variable cost, total cost. This is the format. Purchasing cost, ordering cost, and carrying cost. We'll be writing it, and then we'll be getting the total cost. Computation of cost. Annual demand, a purchase cost is equal to annual demand into cost per unit of raw material. Ordering cost is equal to number of orders into ordering cost per order. Carrying cost is equal to average inventory into carrying cost per unit per annum, that is EOQ divided by 2. EOQ or non-EOQ format. We'll get it as EOQ. Here we'll be writing non-EOQ. Then we'll be writing purchase cost, ordering cost, carrying cost. We'll calculate. We'll write total. Whichever is beneficial, we'll be accepting that. Here the special case is application of formula of ordering cost plus carrying cost. Situation when annual demand is not given and total of AO plus CO is given. In this case, where only OC and CC is given, when annual demand is not given, we'll be using this formula to find out annual demand. That is OC plus CC is equal to root of 2 into A into that is annual demand into O into C. We know what is O and C, that is ordering cost and carrying cost. I'm repeating once again, OC plus CC is equal to root 2. Here will not be dividing it, we'll be multiplying the C. Okay, remember this formula. Coming to the next, I'm not able to record this completely, just because my health is not so well. I'm not sure how I'm going to sit for 3 hours in the exam hall. Let's see. Price break, that is multiple discount case, take lowest quantity always. And if they have given 0 to 999,000 to, will be taking 100 in this case. In case of 0, will not be taking 0, right? So we'll be writing 100. In case of like this cases, we'll be writing 1000. Here we will be writing 3000. Choose the level with minimum cost. Stock levels, reorder level. I have shown you this formulas in the previous video. If you have not checked the previous video, please go and visit once. What is sunk cost? We have explained every theory in detail in a separate video about costing. Okay, just because it is very little, let's read it once again. In this, stock levels, sunk cost, historical cost incurred in the past. What is shutdown cost? Cost which continue to be incurred even when a plant is temporarily shut down. What is cost object? Anything for which a separate measurable of cost is required. Imputed cost, that is notional cost which do not involve any cash outlay. Cost sheet preparations based on functions. Valuation of finished goods is done after cost of production stage in cost accounting. Material requisition, documents used to record the issue of direct material to a job. Job costing is method of costing. This method is used for non-standard and non-repetitive products. Notional rent is included in cost accounting. That is, we'll be adding it. Remember the formula, go back a few minutes, then you'll be finding it. A stock card is equal to information about only quantity will be mentioned. Stock control account, only quantity will be mentioned. Store ledger, quantity with price also it will be mentioned. What is the difference between cost control and cost reduction? We have discussed in this in detail. Here I will be going fast. In case if you are not sure about this answer and question, please go back to our video, which I'll be tagging it in the comment section. In case if you have not watched, please watch that also before going to the exam hall. Achievement of planned or standard performance set in advance of production. In case of cost reduction, that is real and permanent reduction in the cost of goods or services produced. Minimum focus will be in cost control, aims at maintaining the cost in accordance with established standards. Concerned with reducing cost, it challenges all standards and endeavors to better than continuously. In case of cost control, temporary or permanent, it seeks to attain lowest possible cost under existing. In case of cost reduction, recognition condition as permanent, since a change will result in lower cost. Coming to emphasis as on past and present, cost reduction on present and future. How it ends? When targets are achieved in case of cost control, but in case of cost reduction, no visible end. That means it will be continuing even after the target is achieved for many years. We are at the end of the page, that is knowing about digital costing system, like a conversional cost accounting system. Digital costing system 2 collects data, classifies data, accounts the data to get and process into the making decisions, but the difference in the method of collection, medium of storage, forms of analysis and reporting. It links different businesses functions such as production, procurement, inventory management with digital costing system of its suppliers, customers and the market through data sharing and network interaction. The minimum information, it provides data to get the following information, that is cost incurred on a cost object, data on time spent, data on resource consumption, data on current market, price of final product and raw materials, data on lead time and availability of materials, data on product demand and trend. Coming to the very last point of costing revision. Time booking is the method wherein each activity of an employee is recorded. This is time booking. In case if you have liked the video, please like, share, and also comment in case of any errors, or in case if you want me to share something. Keep supporting. Thank you. All the very best for your exams. I know you have spent a lot of months preparing for this exam. Hope we'll get our desired results. All the very best, everyone. Lots of love. Keep supporting. Thank you.